Mona, I am curious, as you take a look at the risks that you see in the future, is this it? Is it the fact that maybe some of the headlines around the vaccine can still rattle these markets?
Yeah, I certainly think that's a key one. We have never gone through a process where we're trying to roll out vaccines, not only to the entire nation, but really to the entire globe. So certainly we'll see headlines around delays like we saw today from Pfizer, but also perhaps headlines around, consumers and people being just a little bit cautious on taking the vaccines. And so we certainly expect, as we get through the next couple quarters of vaccinating the entire global population, we certainly may get hiccups along the way. But certainly we do see the infrastructure in place to get this moving to a point where we do think we will have some level of herd immunity between the number of people vaccinating and the number of people that actually have the virus itself. The second probably risk out there is still, what happens on January 20th and after that. I think Election Day has come and gone. And of course, we're all looking towards, Inauguration Day now, and really what the first 100-day priorities will be of a new, potential Biden-Harris administration. And I think that'll be critical. We're hopeful that that includes some form of stimulus. We're hopeful it includes infrastructure package and perhaps a bent towards, clean energy as well as some globalization. So it's probably two of the key risks we're seeing on the horizon, in addition to what we discussed earlier, which is perhaps this steadily upward moving long end of the yield curve.
Interesting. We're going cross-asset with you. I'm going to take it back to some earnings because there's still some sprinkling about out there. Ulta Beauty coming out with its third quarter like-for-like sales, falling 8.9%, but it's better than expected. Adjusted earnings per share also a beat, $1.64. And this is, of course, a company that has continued to do pretty well across the board in terms of we'll see how people are buying at the moment makeup out there, and people wondering whether or not we'll need to look good for a Zoom call, of course, down 2.25% on the back of those numbers. So we'll dig into the detail as to why that company is falling on the back of the numbers. But Mona, your perspective from the fundamentals of business right now, and what earnings season has told you, and what you're looking for in terms of the performance in fourth quarter.
Yeah, absolutely. I think generally what we've seen consistently this quarter has really been outperformance from an earnings perspective. And, I think we came into the quarter looking for maybe down 20% or so, and it looks like we'll end the quarter probably down about 14%. And that's consistent with last quarter's earnings as well. So overall for 2020, again, probably somewhere down between 10 and 12% year to date, which compared to some of the initial estimates of down 20% plus, looks fairly healthy, which tells us that certainly some parts of the business community have thrived through this crisis. And certainly some parts of the business community have really weakened through the crisis. And unfortunately, that's largely the small, medium businesses, the service-oriented businesses here in the U.S. Looking forward, however, estimates are, for the first time in a while, looking to perhaps be ratcheted upwards rather than downwards. Currently, the estimate for 2021 S&P earnings is roughly around plus 23% year on year. So a phenomenal number, of course, a rebound off a weak year. But it looks like there could be some upside to that number. Really depending on how, of course, the logistics of the vaccine and when consumers really start adjusting their behavior accordingly, but perhaps could end up in the 25% to 30% range as we get towards the end of next year.